Hello there. Welcome back to my channel. This video, we want to look at a question on incomplete records. So we have got a question that we have here, which reads: Tato Traders financial year ended on 31 March. The owner had a bank account only and no other accounts. So we see that we have got an indication that there are no other accounts that are there, indicating that it's a question on incomplete records only available from check counterfoils and from notes on payments and from debtors. Then I use the information given below in the balance sheet on 31 March 2018 and the information obtained from the financial records are to prepare the following accounts. So on the first part, you have to prepare the debtors control. 5 months. So that's what we have. Further on 4.2, you are supposed to prepare the income statement for the year ending 31 March 2014. So basically, that's what we have. And then we are given the balance statement on 31 March 2018. So obviously, this is the balance sheet statement on 31 March 2018. So this is the information that we have that we just need to browse through before you start to answer the question. So beneath that, you are also given further information that you also need to go through. So moving on, we've got a continuation of additional information that we have that you also need to browse through. So you see that our information according to the question is ending on information H. So I'll start with the data control account. So if you go to our answer section, you're going to see that this is going to be our data control account. And obviously, we are going to start with our balance BD. And we know that in the data control account, we should take note that the balance BD will be on the debit side. And then we also have sales on the debit side. So on the credit side, you'll be having your bank, that is the amount that has been paid by debtors. The amount that is being received by debtors will be on the credit side as bank. And then if there are any discount allowed, you need to put that one on the credit side again. And then obviously our balance sheet will now come to the credit side. So basically those are some of the entries that you just have to take note about which side you should post them. So we are saying you have to start your balance BT on the debit side. And I will try to go to the question and try to see where do we have that balance BT. So balance BT basically represents the balance that we have at the opening of the period, at the beginning of the period. So obviously, if you check here, you would see that our year is ending 31 March 2014. So very important for you to identify your financial period. So our financial period basically is starting 1 April 2013 to 31 March 2014. So this is going to be a financial year whereby starting 1 April 2013 to 31 March 2014. We have to take note. So our opening balances will be on 1 April 2013. So if you go uh, to our balance sheet, you'd see that we are given balances on 31 March 31 March 2013. Obviously, these are the balances that are going to apply on 1 April 2013. So these are the opening balances that we have here. So we want the opening balance in the debtors control account. Obviously, we look at the debtors balance that we have, and you see that our other current assets, we have got our debtors is 20,000. So obviously, this is going to be our opening balance. So we have 20,000. So moving on, we also check for other information that we need to enter according to the question. So if you come here again, you would see that we also need the amount of bank, that is the amount that is being received from debtors. Amount paid from debtors, we come here, you see that we are given here is the following is a summary of the bank statements. So whereby you're given deposits of 153,600. So basically, all the deposits, that's where we are going to get the amount for. The amount that is being received from debtors is bank, and that amount should go to the credit side of the debtors control account. So if you go down, you see that is the information given. So we proceed to the additional information. If you come to information C, so you're going to see that information C reads all the deposits were for cash sales and payments by data. So basically, we are saying the amount that we are given there. If you refer back, you see that we're given the amount is 153,600. So it means this is the amount of debt that we are looking for. That should be on the credit side of the data's control. So if you come to the data's control, go to the credit side. We are saying bank, and we have an amount of 153,600. And you also check if you've got a discount allowed. So obviously we go on the and try to see if we have a discount allowed. Obviously, we try to go now into information to check for that information. So you are told that the data on 31 March 2014 amounted to 18,800 rands. Discount of 2,480 rands has been allowed to data. So this is going to be the amount for discount allowed, which should go to the credit side of the data's control account. So we go there and we put our discount allowed. And the amount that we have is 2,480. So that's what we have on discount allowed. So obviously, remember, I'll check if we've got our closing balance. Remember, we are supposed to have our sales, and that should appear on the credit side. So it's either our sales figure will be the balancing figure, and the balance BT, that is the balance CD at the end of the period, will be the balancing figure. So we check if we are given the balance information. So if you go, you see that on D, we are given that the data of 31 March 2014 amounted to 18,800. So this is the data on 31 March 2014, which is at the end of our financial period. Remember, we indicated that our financial period is ending on 31 March 2014. So we've got 18,800 is our balance CD. So we obviously our balance CD will be on the credit side. Our balance CD, the amount that we have is 18,800. And then we show by putting our double lines. So obviously our sales figure is the one that we are looking for, and we should find it as a balanced figure. So what we are going to do is to times at both sides. So if we add 153,600 plus 2,480 plus 18,800, we are going to get a total of 174,880. So this figure then has to come on the debit side in between the double lines. Figure, so we're going to say 174,880 minus 20,000. And we are going to get our balancing figure is 154,880. CD 18,800, which should come here below the double lines, the opposite side is our balance PT. So basically, this is the data's control account. We have required that now. It means we have found ourselves. So remember, on our incomplete records, we are saying we don't have enough information of us to prepare the final accounts. Final accounts are meaning the financial statements, as in the income statement and the balance sheet. So we have to look for other elements of the income statement or the balance sheet since the records are not complete. So the figure for sales is the figure that we are going to use now in the preparation of the income statement, whereby it's going to be our sales 154,880. So with that, now we can move on to our next account, which is creditors control account. So for creditors control account, we've got our balance BT on the credit side. So basically, we're saying balance, which is balance BT and balance at the beginning. We'll go to the information given and try to see what's the balance BT. Remember, we said the balance that we have in the balance sheet represents at the beginning in 31 March 2013. That was at the beginning of the period. So if you come under current liabilities, that's where I find creditors will get 14,080. But beneath the table, we are told that the amount of creditors represents wages due 800. So the wages due of 800 is inside of 14,080. And then the figure for creditors is only 13,208. So basically, we are only going to be concerned about the creditors amount. That's the one that we are supposed to put as our opening balance in the creditors control account is 13,280. So here we are saying the amount that we have is 18,280. So with that now we can now also be able to enter some of the transactions. Remember, the figure for purchases is also supposed to be on the credit side. So we are also supposed to find this figure as a balance account amount. So that now all the amounts that we paid to our creditors through bank, we are supposed to come on the debit side. So basically, we can now try to see, according to information given, the actual amount that was paid to creditors. Get it in the bank statements. So you see that we have got purchases of stock, which is represented by 120,000 here. It represents the amount that was paid to our creditors, and it has got to go to the debit side of the creditors control account. So we've got 120,000 on the debit side as our bank. So with that now, I'll also check for discount received. So discount received also comes on the debit side. So check in the question if you've got discount received. Right, so if you go to information E, it reads a discount of 2,200 Rand was received from creditor. So we have got 2,200 is our discount received. So here we have got discount received. Discount received. We have got 2,200. So basically, this is what we have. So we now know that the missing amount is only the purchases. So we go to the information given to try to see in terms of the close 1 March 2014, we combined as follows, which is written as purchase of stock is going to be our closing. It comes as a balance CD, on the debit side. So balance CD is 30,200. So that now we can now be able to put our double lines. So after putting the double lines, obviously we need to find the total of the debit, which is supposed to also come on the credit side in between the double lines. Remember, when you are balancing the accounts, you are supposed to add the total of the debit and the credit, and then you compare which total is greater of the debit side or the credit side. The greater total should come in between the double lines at both sides. So in this case, we've got a greater total on the debit side. So if you add 120,000 plus 2,200 plus 13,200, you're going to get your answer is 135,400. Then the amount should also come on the credit side, 1,280, so that you can be able to find the balancing figure is 122, 122,120. So this is the amount that is supposed to go to the income statement as our purchases. So we take note of that. So we have found the missing figures since we have got incomplete records. So we've got the purchases that we have found in the creditors control account, and also we've got our sales 154,880, which both of the figures we are going to use in the income statement. So with that, we can now proceed to the next statement, which is going to be now the income statement for the year ending 31 March 2014. And we know that the income statement, we start with the figure for sales. And we have already calculated the figure for sales. And remember, we found it as 154,880. So this is the same figure that we're going to put here is our sales, 154,880. Then from there, you're supposed to go to less cost of sales, which we have been calculated beneath cost of sales. And then the net figure, which is supposed to be our cost of sales, will come here as our cost of sales. So calculation of our cost of sales, I remember the formula that we use. We are going to use the formula that says cost of sales is supposed to open stock. We add purchases, but also custom duties. We're supposed to add them, and then you subtract your closing stock. Then you get your cost of sales. So basically, that's how we are going to calculate it. So here we are saying we started. And we know that the opening balances are there at the beginning of the period in the balance sheet given there. So we come to current assets. We've got 90,200 as our opening stock. So then after opening stock, you are supposed to add your purchases. So basically, you're saying plus your purchases. And we have already calculated the figure for purchases. Remember, indicators control. And we got the figure as 122,120. So this is the same figure that is supposed to come in. And then we check if we've got carriage inwards. We check the information given. So if you come to the bank transactions, you'll see that we have got delivered cost on purchases. So any transport cost on purchases are part of carriage inwards. So we have got 8,000 as our carriage inwards. Then after our carriage inwards, I'll check if we've got items like import duties or customs duties according, depending on the information given. So we can also try to refer to our bank transactions to see if we've got such. We check. If you don't find anything, you go to extra information again, check it. If you've got any information about a part of our custom duties, our carriage inwards, see that we have nothing. So in that instance, we have to proceed from carriage inwards, and then we less our closing stock. And the figure for closing stock will be in the additional information. So we are going to go to the additional information and check for closing stock. We see that on information F, we are told that stock on 31 March 2014, which is at the end of the year, and we've got trading stock of 34,400, which is going to be our figure for closing and stock. And by putting our brackets. So with that, now we can close. So after closing, now we calculate what is in the box, whereby we are saying 90,200 plus 122,120 plus 8,000 minus 34,400. And then the net figure that we are supposed to get now will come here as our cost of sales, which is supposed to be 140,920. So we can as well try to confirm that. So with that now, we are saying less again, less cost of sales. So it means it's 154,880 minus 140,820. And the figure that you are supposed to get, we have to come here is 39,960. And this is the figure for gross profits. We can take note of that. After gross profits, we are supposed to go to any income that we have in the question that we are supposed to get. So here we are supposed to say plus income. So we check what income do we have according to that we are supposed to include there. We have got discount received as part of income, commission received if it's there. So we try to check if we have that such. We see that according to our information, we can proceed with the additional information. So we check if we have any. So we've got discount of 2,200 was received from creditors. So we have got discount received, 2,200. So it's going to be part of our income. So we can just go and put discount receipts. So we also have to check if we have got any other part of our income. We see that we still do not have any income that way. So in that case, we can just close the total for income. So we have 2,200 as income. So we are going to add it to our gross profit. So if you say gross profit plus income, you are going to get your operating profit. Which is going to be your 42,160. So that now we are supposed now to subtract your expenses. So we're going to say less. So we're going to see that the total of expenses is supposed to come here, but we have to list all the expenses beneath there so that we get the total of our expenses. So we go to our bank transactions. Obviously, that's where we have most of our expenses. So you see that we have got our wages, which is the first expense that we are seeing, 24,600. So uh, wages, but if you come here at the beginning of the period, you see that we've got amount of credit that represents wages due, 800 rands. So basically, what it means is uh, we have got wages for the previous period that were due by the end of the last period, which is 800 rands. So obviously, this 800 is part of the amount that was paid for our wages for this period, but they don't belong to this period. They belong to the last financial period. Remember, when we are preparing this, the income statement, we prepare it according to the matching principle, whereby we say we only record what belongs to this current period. What doesn't belong to the current period, we do not record it in the current period. So the 800, although it was paid in the current financial period, it doesn't belong to the current financial period. So we have to subtract it from the figure for wages from 24,600. So from there, we can now try to see if we have got any adjustment again that is affecting our wages. So we can go to our other section and say wages. And we already know that the amount that we have that was paid in the bank, under the bank statement, we've got the amount for wages for 24,600. And then we are subtracting 800, which was for the previous financial period. And then we go to extra information to check if we've got anything to do with our wages. So we can proceed to see if we have any amount that we can include as part of our wages. So we have got item B, which is saying summary of petty cash payments. We have got wages of 8 rands. So we've got an additional payment that was made for wages for 8 rand, which was not included under the bank transaction. So we have to add it to the figure that we have for our wages. So if we calculate there, you see that the answer that we're supposed to get is 23,880. And then from there, we are supposed to check another expense that we are seeing after our wages. We got insurance 880. We are seeing insurance 880. So we can also try to check if you've got any additional information that is affecting our insurance. So we have to check item by item if we have got any adjustment that is affecting our insurance. We see that we do not have anything that is affecting our insurance. So we have to take the figure as it is, 880. Remember, what is in the bank there represents the actual amount that was paid for that expense, but the amount that was paid does not mean it was the actual amount that is supposed to be for the period. So if there are any discrepancies or any adjustments which needs to be done, we can only find them in the additional information. So if additional information is quiet, it means the figure that you are having here is representing for is the actual amount for the current period. So you've got 880 for insurance. So we come here, we indicate it as insurance, 880. And then from there, we've got water and electricity. So if you refer back to water and electricity, you will see that we've got 1,440. So obviously, you also go to additional information checking any adjustments that is pertaining water and electricity. But according to the question, we do not have, which means we take 1,440 as it is and put it here, which is 1,440. So from water and electricity, we have the next one, which is going to be our general expenses. Our general expenses, we've got 2,800. But obviously, we check any additional information saying the creditors on 31 March 2014 were compared as follows. So we have got general expenses as a creditor at the end of the period. So it means this was part of general expenses that was not paid by the end of the period, which is 176, which was due. So anything due, we have to add it to the amount given in the bank. It indicates that 176 belongs to the current period, but it was not paid. So we have to add it so that we include it for the current period since it belongs to the current period. So any accrual or owing figure, we have to add it. So for 176, we add it to 2,800 for general expenses. So we come here. For general expenses, we are saying 2,800, then we get 176. So the total that you're supposed to get is 2,976. Your repairs, 1,208. If you go to additional information, you're going to see that we do not have any adjustment affecting our repairs. So we take 1,280 as our repairs. Then from repairs, we have our stationery, which is 800. So stationery 800 indicates this actual stationery that was paid for, that was purchased. So what we want is the stationery that was used is the amount that is going to be an expense, the amount of stationery that was used. So we check if we've got any additional stationery that was purchased or any stationery that we had at the beginning of the period, we add it to the one that was purchased. Then we subtract what is remaining at the end of the period. That's how we can get what was used. So if you come here, you see that we do not have any indication of stationery that we had at the beginning of the period. So we can check additional information. You see that the stationery at the end, we've got 240. Okay, this is not stationery at the end, but it was summary of petty cash payments. It means we have got stationery that was paid using petty cash, so it was not part of our bank. So you have to add this 240 to the stationery that we have in the bank. Then you get the total. Then you subtract stationery at the end of the year, which is going to be 120 as stock on 31 March 2014. So with that, you can now be able to find the actual stationery that was used. So we are saying stationary. So we take the figure that we have here, which is 800, and then we add the one that was further purchased, 800 plus 240. Then we subtract the amount of stationery at the end of the period, which we are given as 120. So if you calculate correctly, the figure that we are going to get is 920. Then we further try to see after stationery what we have. So after stationery, we've got interest on loan, which is 1,120. So for interest on loan, we check what is the additional information saying about interest on loan, but we see that it is saying interest on the loan must be brought into account. So we go to our balance sheet. That's where we have information about interest on loan. We see that we have got 50%, and then the loan that we have is 32,000. So try to see. So we see that we also have an installment that we have on loan that was made on 31 December 2013 of 3,200. So it means we have to make some calculations so that we find interest on loan. So it means from the beginning of the period, that is April 1 April 2013 to, so we are saying from 1 April 2013 to this day, where we've got an installment of loan that was paid, that is on 31 December 2000. because the installment was done on 31 December 2018. So from there, we cannot be able to calculate interest on loan for that period. So we count the number of months that we have from 1 April to 31 December. So we've got August, September, October, November, December. Then count 5, 6, 7, 8, 9. We've got 9 months. This one we also 32,000 times the interest on loan, which we are given is 15% here. So multiply by 15%, which is 15 over 100. And then if you multiply like this, you get the annual figure for 12 months. But we want for 9 months only. So we multiply by 9 over 12. And we see what we get there. So we can as well try to calculate. Then you're going to get your answer is 3,600. So we have 3,600 for the first period. Then for the second period, it's now 3 months because we have first 9 months on this period before the installment. Then after the installment was paid, it was now only 3 months. So when the installment was paid, it was now 32,000, which is the amount paid, which is 3,200. So we subtract 3,200, and then we find the balance after the installment was paid. So we're going to say 32,000 minus 3,200, and we get 28,800. Which means the loan balance was now 28,800 for 38,800 times 15%, and then we get the annual figure 3 over 12. So we calculate it from that point of view and see what we get. So we're going to get 1,080. So this is the one that you are going to get is 1,080. So if you get 1,080 now, you now add it to 3,600 to get the total for interest. So in now when you come now to other section, we are saying interest on loan. Whereby we have our calculation is 3,600 plus 1,080. So we get 4,680. So this is what we have on that part. So from there, we now move on to the next expense that we have. So after interest on loan, we have got delivered cost on purchases, which we included in the trading account is carried inwards. Then we go to deliver cost on sales now. This is now carried outwards. When it's now delivered cost of sales is carried outwards, it is go under less expenses. It's 700 rands. So we include it is carried outwards. So this is what we have, and then we move on to the next one, which is now given installment, which is not part of that, equipment, not part of that, paid cash. So remember, if you go to extra information, we've got other expenses that won't be mentioned in the bank statement. We have the issue of depreciation. So we have depreciation. So before we include our depreciation, we also have a discount. Discount allowed. It's also the expense. Discount of 2,480 has been allowed to debtors. So we have got discount allowed 2,480. So we include discount allowed. Then from there, we can now calculate our depreciation. So information on depreciation, we have it on G. We said provide for depreciation as follows. We've got equipment 15% per annum on cost price, and vehicles 20% per annum on the diminished balance. So what is important is for you to know how to calculate using the two methods. So on cost, calculating using our cost is going to be 15%. So we just calculate by saying percentage of cost, and that is the cost price method. So we come here, we say, we are seeing that this is where we have put our fixed assets. So it's that using the cost price method, you're going to say percentage times cost. So this is the formula for using cost. It's given the percentage is 15%, 0.15 as a decimal. You see what we get by calculating it. See that we've got 3,120. So that's on equipment. Then if you go to our bank transactions, we are seeing that we've got an equipment that was bought on 30 September 2018 for 4,800. So you count the number of months that this equipment stayed in the business. So it was the same 1, 2, 3, 4, 5, 6. So it stayed for 6 months. So we're going to calculate depreciation for the for 4,800, 4,800, and then we multiply by 6 over 12. So basically we are saying 0.15 times 4,800, then times 6 over 12. And you're going to get your answer as 300. This is depreciation on equipment. So this is depreciation on equipment. Then we also need depreciation on vehicles according to our additional information. We are told that on vehicles, 20% per annum on the diminished balance. So on vehicles, are diminished balance, we say percentage times carrying value. Where our carrying value, we are saying formula for diminished balance is percentage times carrying value. Where carrying value, you get it by saying cost minus accumulated depreciation. So cost minus accumulated depreciation. So if you go to the question, you see that for vehicles, our cost is 30,400, accumulated depreciation is 4,000. So if you subtract 4,000 from 30,400, you get your carrying value is 34,400. So we have it already calculated, and then the percentage is at 20%. So basically, we are saying 20%, which is 4,400, which is the carrying value, this one, which is going to be 6,880. So to get your total depreciation, which is supposed to go, total depreciation, which is supposed to go to the income statement, we add all the depreciations. Remember, you've got 3,120, and then we add your 360, and then we add your 6,880. So that's how we're going to calculate it. As we go to our income statement, we say depreciation. Then in brackets, we just add the 3 depreciations, whereby you've got 3,120. So having put that, we are supposed to add the 3 figures that we have there to get the total depreciation, which is supposed to be 10,360. So basically that's what we have, and this becomes the last item that we have on our expenses. So from there, you can now be able to close so that we can get the total for your expenses. So if you add everything that we have in the box from 23,880, you add down, you add to 10,360. Then the total that you're supposed to get should come in as your less expenses, or as the total expenses. So if you add, you see that the total that you're supposed to get becomes 9,596. And we are saying less expenses, so we're subtracting more than our operating profit figure. So obviously, it's going to lead us to a negative figure there, which is going to be your final figure for net loss, since we are having a negative answer there. And then if you subtract correctly, 4,160 minus 49,596, you get your answer as 6,136, and this is going to be your net loss figure. So basically, this is what we have, and we know that if it's net loss, you're supposed to leave it in brackets to show that it's a negative figure. So this is what we according to our income statement. So thank you for listening, and hopefully the video was helpful. Please let's not forget to subscribe and share to our channel. And let's not forget to share the link to our colleagues who are doing financial accounting and for. Let's meet again in the next video. As for this video, I'm signing out.